Hey, what's up guys? It's Tyler from Fallible, and today I'm going to be doing video 3 of the Trading Politics series. If you haven't seen the first 2 videos, I'm going to link to those in the description. You can go and check them out. What I'm doing is a overall tutorial and walkthrough of how to trade on PredictIt, and we're having a lot of fun with this. It's like serves as a cross training for financial trading, and so if you're interested in that and you really want to get started from the beginning, go to the description and click on those links to see the other videos. Now today I'm going to be talking about a trading strategy that I've stumbled upon on the web called neg risk, and it's a form of arbitrage, and it's a really cool way to guarantee a profit on PredictIt. So stay tuned for that. But before I get into it, I want to remind you guys that we have a special link in the description of this video as well for you to sign up and get started on PredictIt with us during this Trading Politics series. If you hit that link, you'll be able to go to the website and get a 100% match on your first deposit up to 20 bucks. So, at least go there, put in 20 bucks, they'll give you another 20 bucks for free on top of that, and you'll instantly have a 100% return, and then you can play along with us. All right, guys, now let's get into the video. All right, so over the last few weeks, I've been digging around the internet, going around in forums, and trying to single out who's making money on this site, who's approaching this in a professional manner, and actually extracting money out instead of just, betting emotionally on their favorite candidate. And through the course of this research, I've actually stumbled upon an interesting strategy that a lot of the sharps use on the site called neg risk trading. Now, neg risk is a form of arbitrage, so it's basically a guaranteed profit. And in financial markets, this happens all the time, and it was a lot more prevalent back in the 60s, 70s, and 80s where markets were more inefficient. These days, arbitrage in financial markets is almost entirely erased because we have computers operating at microsecond speeds that are taking away all those inefficiencies really quick. But essentially what an arbitrage is you have something in one area and the same selling for one price, and at the same thing in another area selling for a different price. So a common arbitrage in the market is, let's say Apple is trading for $100 a share on one exchange, and on the other exchange it's trading for 102, and that's a spread there. So what a machine could do is buy Apple for 100 on, let's say, the NASDAQ exchange, and sell it for 102 on the BATS exchange, and instantly lock in that profit. They didn't need to hold the investment and wait for it to grow. It's just an instant profit. Now, in financial markets, those stuffs are actually pretty far to come by now, just because so many people are looking for them, and big money. We're talking billions of dollars are making sure that the arbitrages stay in line. But on PredictIt, it's a little bit smaller of a market. It's a newer market, so even guys like us can take advantage of these arbitrage opportunities. Now, this neg risk trading needs a few things. So number one, you needed to have it be in a multi-contract market. So you need a lot of different contracts, and that way you can piece together the spread correctly so you can lock in that guaranteed profit. And number two, you need to have the volume. So you need to have a market that's thick enough to where you can actually execute, because each cent matters in this particular trade. You can't just pay up 3 or 4 cents across the bid ask and expect to make money on this trade. So you need sort of liquid markets for this, and you have to have a lot of contracts. Now, if you look here, you can see that a perfect example of this is actually the 2020 Democratic presidential nomination. So we have all of these guys running: Biden, Warren, Buttigieg, all of these guys are running. And so we have a lot of opportunities to lock in a neg risk trade here. And it's also one of the most popular markets. So it's always listed up here at the top, and we're sorting by trade volume. And so this is one of the most speculated upon markets on the entire site. And that means we have a lot of liquidity, so we can easily put on the spread without having to pay too much up on the bid ask. Because with arbitrages, the margins are pretty thin, so you can't just go in and pay 5 cents above or 5 cents below the best price and just try to get filled on your contracts. You have to be very precise with it. All right, so the neg risk trade, that occurs when you have multiple contract markets, because what happens is only one person can win the election, for example. So in a market where there's one winner and all the others are going to lose, then if you buy all of the no contracts, that that you're only going to lose on one. So let's go to the 2020 Democratic nominee one, and only one of these guys is going to win. So we can buy no contracts on all of these guys, and we know that we're going to win on every single one of them except for the winner. And so if you think about it, let's say that you just bought one contract. Well, if you're wrong, you could lose all of your money. Now, let's say you bought 2 contracts. Well, only one guy can win the election, so you could be wrong on one and right on the other one, but you're at least going to get some money back. And what you guys are going to see here is, as you buy more contracts in one underlying market, your total risk goes down because you're going to have more payouts to yourself that now that only one guy's going to win. So say you buy 10 candidates and you're buying all 10 no's, the one guy that's going to win, you're going to lose on, but you're also going to get profits on the 9. And so each one of those that you buy, you lower your risk. And if it's at the correct price, we get something called negative risk, where we buy so many no contracts that no matter what happens, we actually win money, because all of the profits from the stuff that we're right on, let's say there was 20 candidates and we bought 20 no contracts. Only one of them is going to win, so we'd have 19 contracts worth of profit and one worth of losses. Now the key with this too is also to make sure you account for commissions, and so that has to go into the model as well. And I know just talking about this is a little hard to wrap your head around first, and it was for me for sure. And that's why I'm going to run through a full example here so you guys can see. We're going to go into the spreadsheet, we're going to look at the math of it all, we're going to calculate it out, and then we're going to execute it on the PredictIt platform so you can see this trade in action. All right, so we're going to do this example on the 2020 Democratic presidential nomination, and you can see we have a perfect thing. We have a bunch of candidates in this particular market. And now I'm going to go over to the spreadsheet that I've pre-prepared here, and we can enter in prices and start seeing if it will work. So here is the PredictIt neg risk strategy that I have. And over here, I have all of the candidates that actually have a no price. And so if you look over here, by no, it has to have at least 99 here. We can't have NA. That means we can't execute it. So I put all the guys with 99 and less up here. And so that is from Deval Patrick all the way up to Biden. And now all we got to do is enter in these no prices into the spreadsheet. So I've done a little bit about this before, but I want to make sure they're all correct. So Biden 78, Warren 78, Buttigieg is trading for 80, Sanders is 85, that's right. Bloomberg is 87, Yang 93, got that right. Clinton is for 96, Harris is for 97, we got Gabbard at 98, Klobuchar at 98, and then Deval Patrick at 99. Okay, so I have all the prices in here. Now, look at the math here. So here's the price that we're going to pay for each contract, and we're going to buy every single no contract in this particular market. And now what I did here in the other columns is that I essentially said what would happen to our P&L if Biden won and then Warren won. So I went through each candidate and said, okay, if Biden wins, here would be the payouts. If Warren wins, here would be the payouts, etc. So let's go through this example with Biden. So if Biden won, we bought a no contract for 78 cents. And since he won, we would obviously lose all of that money, which is why it's a negative 0.78 P&L. Now, all of the other candidates, because we also said that they wouldn't win and we were correct, we're actually going to get positive payouts. So I calculated the profit and loss on that. And I also made sure to include the commissions. And this is super critical, guys. So PredictIt takes a 10% commission on profitable trades. They don't take any commission on trades that you lose in. So how you calculate this is you do 1 minus the price we paid and then times 0.9, and that's how I get that number. And then I did that for every other candidate. And so you can see here what happens is if we add all of this up, that's what we get in the total P&L column. We actually come out with a profit of 2 cents. You know, no matter what happens in these scenarios, you can see that the total P&L across all these different scenarios is positive. And so it doesn't matter if Biden wins, Warren wins, Buttigieg wins, we're still going to come out with a profit. Even if you go back to these ones where these super unlikely candidates are going to win, and so like you paid up a no for 99 cents, let's say, and they still won the election, and you actually had these huge losses, see these 98 and 99 cent losses, you would still come out slightly ahead, or in this case, right around zero. So as you guys can see here, we have all the prices in here. I've calculated out the P&L for every single scenario, and then you can see the P&Ls at the bottom. So this trade you can't lose on. These numbers will fluctuate around a lot. So if we go back to the no price, and I change these as the markets move, that's going to affect the total P&L. And so sometimes the markets will actually line up so where it's efficient, and you'll see zeros at the bottom here. And these will all be zeros, and there won't be that much profitable opportunity. And sometimes it's actually higher. So when I was fiddling around with this a few days ago, I was actually able to get this up to almost 4 cents. So the markets were even more out of whack. So what you want to do is you want to have a model like this where you say, hey, here are my payouts for each scenario, and then update the prices in the no column over here, and then you can see how much your arbitrage profit is going to be, and then when it's looking good to you, you can go in and strike and execute. All right, guys, now I want to execute this on the platform, and you guys are going to be able to see this in action. I'm going to show you how we actually get negative risk on the platform. So all we got to do is just buy no on all of these guys. So I'm going to buy no on Biden. I'm just going to buy 1 share for demonstration purposes at 77 cents. Let's submit the offer. All right. And we just go through and we slowly execute all these. Now notice we bought Biden for 77 cents and it says investment 77 cents up here. So we have 77 cents at risk. Now watch what happens when I buy Warren. I buy another no contract and you can see our risk actually goes down, and that's because we're sort of hedging our bets, right? So if Biden wins, we're going to get the payout on Warren. If Warren wins, we're going to get the payout on Biden because they both can't win. And as I buy more no's, you're going to see this go down even further. Let's buy another one. Now I'm going to keep buying them. And you can see this is lowering and lowering. Now we're getting down to the wire here. All right, we got the last one, Klobuchar, and now our last one's Patrick. And so, okay, we've achieved neg risk. So the trade has been better. I've been able to get this more negative, but you can see here that we've actually reached a negative number, negative 0.01. And so what that means is PredictIt is essentially not charging us to put on this trade at all because the algorithm knows that we cannot lose money. And so if you go to the dashboard, you can see our market here. We have a market investment of negative 1 cent. So it actually doesn't really take up any capital for us to put on this trade because there's no risk, right? We don't have to put up any collateral in case we lose. We literally can't lose on this trade. So we have negative 0.01 cents guaranteed, and we actually could have a huge payout because let's say we go back to the US elections, 2020 Democratic nominee, and let's say some random thing happens over here where Zuckerberg just wins the presidency. Well, we'd be right on every single one of these and we'd have a huge payout. So there is a chance that you could be right on all of them and get the huge payout, although that's super unlikely. One of these candidates is going to win, and so instead we're likely just to get that guaranteed 1 cent. And so I know that's not a lot of cash, but you could definitely ratchet this trade up with a lot more contracts and also strike when it's a little more hot, maybe when it's 3 cents or 4 cents. And you could just basically instantly print money that way. And it's not going to take up your capital because PredictIt is lowering your risk for you. And so it's a very interesting trade. And so a lot of people, when they're first getting started off on this platform, at least the sharp traders that I've read about online, they've talked about how they use this strategy to build up their initial capital base at first. And so they scour all these multiple contract markets and find where these things are out of whack and just lock in profits again and again and again and keep on doing it. So, all right, guys, well, that's all I had for this video. I hope you liked the description of the neg risk trade. I know it's a little complicated. I hope that example really helped you guys kind of visualize it and, go try it yourself. All you have to do is go in the link in the description. You can have a sign up for your account and get 100% match up to $20 on your first deposit. And just try this out. It's fun. I think it's a good math exercise and a good trading exercise for anyone interested in financial markets because you get to think about all these things like arbitrage and edge and opportunities. And, playing small stakes here really helps you out in the big time arena in the financial markets. So thanks, guys. I hope you really liked that video. Hit that like button and that subscribe button. It really helps us out. And leave a comment below and let me know what you want to see next out of this Trading Politics series. I'll see you in the next one.